Hi, this is Bill Morgan from Morgan and Morgan CPAs, your tax professional for buying and selling homes. Stay tuned for a few tax tips. You bought your first home, congratulations. Here's a couple of things you need to keep in mind. At the closing, you're going to get a 2 to 3 page form called a HUD-1. That HUD-1 has got some tax deductibility things on it. That's one of those things you want to keep in your tax file for the end of the year. The other thing to be careful of is this is your first home that you purchased. At the end of the year, you're going to get a mortgage interest statement. On that mortgage interest statement, if you escrowed your taxes and insurance, all of that information will be on there, and those are great tax deductions for the end of the year. So keep that in mind as you're going through and get ready to file taxes, and those things that you want to keep. You don't need to keep all 12 months, but just make sure you get that last one and look for the form called a 1099 in that file. When you go to sell your home, when you start doing some of that landscaping work and you start painting the house and things like that, make sure you keep those receipts because that's going to help you increase the basis on your home. Now you got to remember, if you're single, the first $250,000 of the sale price over what you purchased it for is tax-free. Secondarily, if you're married, that number actually bumps up to $500,000. But if you think you're going to sell your home for over those two numbers, it's really important to keep the receipts for any improvements that you may have put into your home. Also, another common question that goes with that when you are in the process of selling your home and moving somewhere, moving expenses are one of those things that you can deduct if you are moving 50 miles away from your present home or from your current place of business. So the key word there is, well, the key phrase is 50 miles. You got to remember 50 miles from your old home to your new home, 50 miles from your current employment to your new employment. Those are the two key elements to be able to deduct moving expenses. But remember, the big thing here, and one of the nice things is that tax-free capital gain on the sale of your home. If you have a small business, you can use your home and a portion of it for deductions. There's some finite details for this type of stuff, so you can certainly look it up on the IRS website or come talk to a tax professional about those type of items. But there's some ways to use your home to actually help deduct against the income from your business, but you have to be careful because if you do that, when you go to sell your home, that portion of deductions that you used on your home is actually subject to capital gains. And why I say that is typically if you live in your home for more than 2 years, you can actually get a tax-free sale. So if you want to keep bumping up to the next big house, you can certainly do that and work on a program for it. But keep in mind that if you had a small business in there, there will be a little bit of a tax bill when you sell it. If you have any questions, please contact us. We're here to help the clients of the Mark Deering team.